Hi, so it is time for another quarterly portfolio update. This will be as of the 1st of January. Sorry this is a little late. I had a lot of other video ideas and I didn't get to this one. So in the last portfolio video, I couldn't reveal a particular investment I was building up a position in the company on really low volume. But today I can explain what this investment is and how that is developing. For those of you who are new to my channel, well, welcome aboard. So every quarter, the big funds like Berkshire Hathaway, Appaloosa, Third Point, Pershing Square, they all reveal what is in their portfolios. It is good practice for when my portfolio gets as big as these funds, so that's what the video is about today. I'll first go through the things I bought and sold in the quarter, then I'll go through my performance for the year so far. Then after that, I'll show you my current portfolio as it stands as of the 1st of January. And again, sorry for this being a little late. And finally, my up-to-date wish list with my buy up to prices. So when I say unrealized, what that means is when the gains or losses are just what the market prices are right now. It's also called paper profits or losses because it will change every day. An unrealized portfolio is just a snapshot, not actually how much my bank balance has increased, because of course, I still hold the positions. So not a lot of changes here in Q4. I had 2 new buys and 2 sells. I decided to sell the remainder of my index funds. After analyzing the 2 new investments, I thought it would be best to move my cash into what I thought were far better opportunities. So my thoughts were that the index funds were at best going to average maybe 8% moving forward. That was my bullish case scenario, whereas I saw far bigger upside potential in my new stocks. So I sold all my index fund positions, taking a reasonable profit on those and moving the money into individual companies. Okay, now for the 2 new buys, one of them being that mystery investment. So check out my full analysis of Dropbox that I made where I go into far more detail. But simply put, it is an asymmetric, compelling investment. For Dropbox, the growth has been tracking really well and looking to continue. I'm projecting upwards of 15% per annum. The gross margins are improving, which gives me confidence that they have a solid competitive advantage. They have a recurring business model, which is my favorite type of business model. The switching costs are reasonably high for corporate customers. Not impossible, but it is painful to switch a cloud storage provider. Dropbox has high insider ownership from the CEO in particular. I like it when the CEO and the founder's net worth is tied to the success of the company. We're all on the same page. Now, buying under $20 gave me a margin of safety that I wanted and meant that this was an asymmetric investment. The upside is just far bigger and more likely than the downside, and that's what I want in my investments. So back in October, I was able to buy my first allocation at $19.60. I was hoping to buy more at $17, but it didn't get that low. I'd buy more at $17 if the price was to fall to that level. Okay, so my mystery investment is Nova Lifestyle, and it's a tiny furniture company in California. They design and wholesale medium to high-end furniture pieces from Asia and sell the pieces to mid to high-end furniture retailers throughout America. Okay, now furniture companies are generally a bad investment. Their margins are bad and the competition in their space is very tough. Nova Lifestyle is not even currently profitable and they are going through a tough business transition at the moment, away from high volume products to higher margin products. The business is not going well at all, pretty much the opposite of a good investment. Plus, furniture retail stores are dying with the likes of IKEA and Amazon taking large market share off the smaller independents. So everything about this company would tell most people that this isn't a good investment. But it was all about the balance sheet. This was a true Benjamin Graham style investment, an old school net working capital company. A net working capital investment means we look at the worst case liquidation value of the company and then value it. So let me explain by looking at the Nova Lifestyle balance sheet. First, we look at the current assets. So that is things like cash in the bank and inventory. Current assets are things that can relatively quickly be turned into cash. So they have $9.3 million in cash in the bank. They have other current assets of totaling about $1.2 million. And then they have that $48.4 million of inventory. So the valuable thing here is the inventory. And this is the biggest concern I had with the business. Is this $48.4 million figure, is it accurate? So firstly, they are audited every year by independent auditors as a requirement to list on the stock exchange. So $48.4 million is the audited approved number. Secondly, $48.4 million is the cost to buy the furniture from the factory, not what they sell it for. So when Nova Lifestyle goes to sell the inventory, they will of course put a big markup on this, maybe 30, 50% on top. Therefore, in an ideal world, if Nova Lifestyle could sell the furniture to its customers, then this inventory could be worth $60, maybe $80 million. But I actually think this business isn't a good business, and I'm worried they can't sell the inventory. So I pretended that they suck and they decide to liquidate all their inventory. Now, liquidation normally means selling their inventory at a big discount to the cost of that inventory, so they would take a big loss on that inventory cost. Benjamin Graham would say to take 50% off as a liquidation value of inventory, but I'm going to take 70% off to be even more conservative than Mr. Conservative Benjamin Graham. So after taking off 70% of the value of the inventory, our inventory now is just $16 million in liquidation value. Look, this is extreme, but just stay with me. So we have cash in the bank of $9.3 million. We've adjusted the inventory to be only $16 million, and the other current assets are still $1.2 million. So total current assets are $26.5 million. Now we take a look at all of the liabilities. I'm talking debt, accounts receivable, long-term, and current liabilities, all of it. This is what the business owes, and the total liabilities are $5.9 million. So we have $26.5 million in current assets minus the $5.9 million in total liabilities, and we have $20.6 million. So if I could buy the business for under $20 million, then I could liquidate the company and make a profit. Now this is where it got really interesting. When I started investing, the market cap was only $9 million. $1.65 per share was my average buy-in price. Now, Nova Lifestyle is one of the smallest publicly listed companies in America, so buying shares was really difficult as some days no shares were traded. But at a $9 million market cap and an enterprise value of only $4 million, I was already getting a bigger than 50% margin of safety on my already seriously conservative 70% liquidation value of the assets. I was literally buying a company that in a terrible closing down scenario was worth about $20 million, and I was buying it for $9 million. So even if the business just ran its operations even slowly, the inventory would be worth more like $60 million, and I was buying it for $9 million. But there were two more problems. I couldn't verify the accuracy of the inventory. Just because it was audited doesn't mean it was actually checked properly. And secondly, on a forum I read about the company, it was said that Nova Lifestyle is actually just a shell company for a Chinese reverse merger. I have no idea how that works or even if that's true. I literally have no idea what that even means. So I didn't want to put my life savings into this company, even though on paper, it looked incredible from a valuation point of view. There were still some things to dig into. So at the moment, I have a small stake in the company, but I'm thinking to accumulate a larger stake with an aim to reach maybe 3% ownership of the company. At 3%, I have the right to propose what is called a proxy statement. And a proxy is essentially a document voicing my ideas about the company, and the company has to publish it to the general public. So with a bigger voice, I would then work on trying to unlock the value of the business. The inventory is that value, and I think a lot of it should be liquidated. I would actually like to buy as much of the company as I could and then close it down, liquidating it and attempting to double or triple my investment in a really short period of time. All of this seems really fun, but extremely difficult. So I think the best thing to do is when I get the chance to travel again is to fly to their warehouse where all the inventory is, take a furniture liquidation specialist with me, and attempt to value the inventory myself. Seeing it with my own eyes and having an expert with me will give me so much more confidence in the accuracy of the inventory value on the balance sheet. And then maybe after that, I could make a far better decision and understand the balance sheet in just more detail. If everything checks out, maybe then I'll push for that bigger voice. Back to my portfolio now. Now, I was up about 12% for the quarter compared to 11% for the overall market. For the 12 months, I finished exactly on 20% for the growth of my portfolio compared to about 16.5% for the overall market. The biggest drag on my portfolio for the quarter was my tanker stocks, because this is a reasonably large part of my portfolio. Look, everything else performed really well. I'm still very confident in my oil tanker investments, and I'm expecting an outsized return in the coming years. I just need to be patient. The thesis needs time to play out. I just don't know exactly when this is going to happen, so I'm happy to hold. Now, if you want to know more about my oil tanker thesis, I got plenty of videos here on my channel about that particular investment. Now, as you can see here by my chart, I'm about 40% in cash. Now, I'm holding a lot of cash at the moment while I'm waiting for my prices to come to me. I'm employing a selling put option strategy for extra income while I'm waiting. Now, I've been able to generate somewhere between 8 and 20% extra cash on the available cash that I have. And if you are also sitting on a bit of cash, I highly recommend looking into this strategy. So if you like that idea, I've made some videos explaining this in far more detail. There are a lot of companies that I really like that are so far away from a price I'm willing to pay that I can't imagine even getting them. So I have decided just to narrow it down to this list of stocks that are actually not too far away from a decent buy price. So these are my favorite companies. Now I am planning to focus more of my attention on new stocks that are small caps. Under $1 billion in size would be preferred. So I most likely won't be adding more well-known companies to this list anymore. Okay, so let's summarize everything. Again, not many changes, like in Q3, not much happening here in my portfolio, still just waiting on the prices that I want. But I did have two new buys, so I had Dropbox and Nova Lifestyle, two very different investments. Dropbox I want to hold for decades as I think it could be a big winner long term, and Nova Lifestyle was a straight up bargain. Totally different strategies. I have a strong cash position at the moment, and I really like this because I get to use it to make extra income by selling put options, and I have plenty up my sleeve ready to buy when good prices come. Now there are going to be some potential newcomers to this list next quarter. I'm currently looking into a Japanese company and a UK company that appear very interesting. Both are small cap companies that I am more interested in than the big cap companies like I said before. These will be revealed very soon in the coming weeks. Now I plan to update this every quarter so you can follow along and see how well I'm performing. I hope this was something you enjoyed looking at and seeing exactly what is going on. If you appreciated this level of transparency, please give the video a like and make sure to subscribe to keep up to date for the future. Thanks for watching all the way to the end, and I'll see you in the next video.